So it's a function of demand and supply. It's a function of whether people are buying that particular security or selling it. So there are a lot of market dynamics that affect the stock prices, but there's no guarantee that you're going to get what you return.
What you're invested.
What you've invested, rather.
Really?
Yes.
So, market could go up and down.
Definitely.
So your 100,000 in 30 days, in 60 days, in 90 days, in 365 days, which is a year, could go down to zero.
Yes.
Depending.
Can also triple or double.
Can also triple or double. So folks shouldn't put money in the stock market thinking that, well, it looks like a bank account. I'm putting 100,000. When I knock on the door of Codros Capital at the end of the year, I want my investment, and he's expecting to get the 100,000 back.
Well, no, exactly. So if you invest in the equity market trades on a daily basis, and of course the NSE can see the price list of how a stock perform on a daily basis. So a stock can get 10%, that's the maximum a stock can get in a day, can also lose 10% as well. So if you invest in the equity market, you need to look at what the prices are on a daily basis, either in the dailies or go to the NSE website. Prices are posted there.
Do you think folks, retail investors locally in Nigeria, and that's what this conversation is all about, that's why we brought you here, are a little bit emotional when they are investing? Because there's this discussion between Bolson and Bola in a beer parlor having some pepper soup, and they say, oh yeah, the stock market is doing well. Say, oh yeah, I got about 200,000 somewhere, belongs to my wife or someone, and just pick it up and put it in the stock market.
Yeah, so there's nothing wrong in investing in the stock market, even as a retail investor. But like I said, you should have a long-term horizon. You shouldn't expect that in a matter of 10 days. 10 days you can be lucky, a month you can be lucky. But stock market is really for the long haul. And over time, the stock market always outperform other asset classes. If you look at stock market over a 5-year period, vis-a-vis a money market instrument or a bond instrument, stock market always outperform. But in the short term, there are a lot of things that affect the market. So things like the macro factors, for instance. So backtrack 2015, when we had the election was postponed, there was a lot of sell-off in the economy. People were scared. People didn't know what Nigeria was going to become. So those kind of things affect the economy. Also, for instance, the stock is not doing too well. Maybe the company comes out with an earnings warning, for instance. So they're not going to meet their forecast. You can see investors selling off as well. Also, things like GDP also affect the stock market as well. So we notice that Nigeria has been in recession. And for a lot of investors, they might not see Nigeria as that investment destination. So you might not see those foreign investors coming to the country. They might still want to sit at the fence. So there's a lot of interplay. But over the long haul, stock market always outperform other asset classes.
Let's move on quickly about mutual funds. I'm interested in mutual funds because it looks like mutual funds are coming back. Codros did mutual funds a couple of months ago, and there are new ones still coming up, whether they are exchange-traded products or they are fixed income or they are balanced funds in which you have a bit of fixed income assets and equities and a bit of money market, a bit of a hybrid, as it were. Now we're also looking at maybe next week we're going to have what we call an infrastructure debt fund as well. So it looks like the mutual funds market or managed funds market is expanding.
Yeah, exactly.
So walk us through this. What should retail investors with my 100,000, 200,000, 50,000, what should I look out for if I'm getting into mutual funds?
Okay, thank you very much. Really, mutual fund is really the way to go for a retail investor. And in developed markets or in other jurisdictions, most people that they invest through mutual funds or through exchange traded funds or through indexes. And the beauty of mutual fund is that it's a basket. So for instance, I want to give exposure to someone into money market instruments. A retail investor, probably just 5,000 naira, might not be able to buy treasury bills or commercial papers. Most commercial papers, minimum is 5 million naira. But with a mutual fund, you can have exposure in a commercial paper, you can have exposure in treasury bills because the fund manager is pulling several investors together and he has bargaining power. There's diversification as well. So you're enjoying what somebody that is an HNI is enjoying with just your 5,000 or 10,000. In the past, most mutual funds, entry level was about maybe 100,000, but now we are seeing mutual fund even as low as 2,400 naira because they're really focusing on the retail sector, the underserved retail sector, and also in line with CBN's financial inclusion. So for retail investors, I think is the way to go. But really, there are also different kind of mutual funds. So like you mentioned, there's a money market mutual fund, there's an equity-based mutual fund, there's a balanced fund, which is a mix of equity, bonds, and others. But with every mutual fund, there's an objective. So before you invest in any mutual fund, you need to know the objective. So for most money market fund, they'll tell you the objective is liquidity, they'll tell you the objective is short-term gains, income. Because for money market fund, it's struck to pay dividend every 3 months. So you need to understand the objective of every mutual fund and ensure that it aligns with your own investment objective.
So mutual funds pay returns every 3 months?
Yeah, for money market mutual funds.
For money market mutual funds. Again, because that's basically treasury, because that's the closest to liquidity.
Yes, yes, yes. And for mutual fund, you can always exit your position anytime. So you decide that you invested today and you want to exit in 5 days' time, 10 days' time, you can have access to your money. So it pretty much works like a bank account with additional income. So rather than leave your money in savings account and you think, oh,
or current account,
you can do a money market fund, have access to it anytime you want, and of course get attractive return close to what treasury bills are doing.
So if I put my money and I'm trying to get some sense here, maybe I'm going to do something after the show now about investing. So I do a mutual fund instead of leaving this cash in a savings or just a current account.
Yeah.
I move to do a mutual funds,
yeah,
which is money market, which is quasi money, treasury bills, 90 days, 60 days, CPs and all of that. And that gives me some income every 90 days.
Absolutely.
And so I'm sure that comes in before some banks keep just taking my money from ATM withdrawal and things like that. Okay. What roles do market professionals play in this market, and why do you think this is important? Why do I need to talk to market professionals and not just my friend when we're having some nice pepper soup? Why should I talk to a professional?
Okay, very nice question. So investment pretty much like any profession. So really, if I have a problem with my car, I don't just give it to anybody. I'm not feeling too good, I go to the doctor. So doctor needs to examine me, diagnose me before prescribing any drugs. So for professionals, they understand the investment market. So many things affect investment. So policies, for instance. Before we start the show, we're talking about MPC meeting. So most times the MPC come with a pronouncement. We see that interplay affects fixed income market. We see that interplay affects the equity market. We see that interplay affects the money market. Or maybe inflation figures come out, for instance. We see that affect the bond market. And for someone that's not a professional, you might not understand the impact of some of all these policies on the market. For a professional, we'll be able to analyze your position and also be able to advise you appropriately.
Talk to the doctor. You guys are the market professionals. Inflation is out on Monday. We're going to chat on Monday when that comes out. Thanks for coming through. Bola Aina, head of investments at Codros Capital. And of course, we'll come back after the break. Nigeria's infrastructure debt market is getting a major lift off on Monday, July the 17th. We'll be right back.